Hey, good morning, options traders. Welcome back, everyone. Well, this looks a little odd. What does tic-tac-toe have to do with technical analysis? Well, on the surface, nothing really. But I just want to use this as an example because I was just flipping through YouTube the other day and something showed up in my feed of a guy talking about Fibonacci extensions and how you can make all the money in the world by using Fibonacci extensions. Well, I'm not picking on him or the Fibonacci extensions because you can find a million YouTube videos about people talking about the benefits of a particular technical indicator. And they'll list all of these rules. If this happens, do that. And if this happens, you've got an 80% chance to win. And everybody buys into it. But they don't really stop to think, what are you buying into? And so I thought to make the analogy very easy, let's use something that is a very easy game. Let's take a look at strategies for tic-tac-toe. And before we do, as always, please be sure to click like and subscribe. It's greatly appreciated and helps so much to promote the channel. Okay, so for example, I mentioned that whenever you're listening to somebody talk about the benefits of a certain technical indicator, they're going to give a list of rules. That's what they do. Hey, if this happens, you got to do this. Or they'll always talk about the percentages of times that it wins. So let's do that for tic-tac-toe. I'm going to show you a set of rules where you are guaranteed to win most of the time. So typically in tic-tac-toe, if you're going to play, they usually have that you'll go first, I go second, you go next, I go next. We're just going to sit there and alternate. And so here's the list of rules that are going to guarantee that you come out a winner. When you are the first player, you're going to start in a corner square, and that's going to guarantee a win most of the time. But when you are the second player, always start in the center, and that forces a draw unless somebody makes a mistake. And so overall, think about this. If you can win most of the time when you're going first, and you can never lose when you go second, you can always force a draw, overall you're a net winner. What could be better? So let's say if this were a market or a tournament, let's go put lots of money into it because we've got this set of rules that is going to guarantee us to be a winner. So for example, here's our tic-tac-toe board, and I think everybody knows how to play. There's no sense in going over the technical rules of it here, but let's say that it's our turn to go first. If we come up here into a corner square, we can take any one of these four outer squares. As long as our opponent doesn't go here, because that's going to force a draw, but instead goes to one of the remaining 7 squares, which we're going to assume is going to happen randomly. Your opponent's going to pick one of these remaining 8 squares, right? You took this one, there's 8 left. He's going to take one of them. And as long as he doesn't take the center one, you're going to win in any of these green. So most of the time you're going to have a win. So take a look. For instance, let's say that your opponent comes down here. Well, what you're going to do is to force a block. So you're going to always go to a corner square. Let's say you come up here, that forces a block. The opponent has to go here. Now what do? Take the remaining corner, and now you've got a guarantee either in this direction or in this direction. The opponent can only block in one direction, so let's say he picks this one. Now you've got the diagonal, and there is the win. So again, that is always going to be true if your opponent takes anything other than the center square. All right, now it's your turn to go second. What are you going to do? Let's say that your opponent puts the X up here. You're going to go to the center. Why? Because you know the rules. You know that's the way that this works. Your opponent comes up here to force you to come up to the center. You take the center, but now look what happens. Now you force the opponent to come down here to block. You can take another position, let's say over here. You force him to block over here. Now you come down here. Doesn't matter. Lots of different patterns, but it's a draw. So by taking the center square when you are second, you can always force a draw. So again, this was the whole idea of being an overall net winner. If you go first, you win most of the time. If you go second, you will always draw. And again, therefore, you always win in the long run. So again, if this were a technical indicator in the markets, people get a big idea. They say, let's start playing for money. I just learned Fibonacci extensions on YouTube from this guy, and he showed me all of these rules. I've learned a winning strategy. All right, well, what should you expect? Well, you should expect that it's not a winning strategy. Why? Because worthy opponents know the strategies too. Your opponents are going to take the center square when going second, just like you. They know that. You're not the only person that knows these rules. So now it comes down to that the wins are only accomplished on mistakes, not on talent. Remember, if you choose the center square, if you go second, you could pull off a win, so could your opponent, but it also requires that somebody made a mistake. So if you are inexperienced, you should expect to lose because you're probably going to be the one that will make an occasional mistake. And if you are experienced and you're going to assume that your opponents are, then you should expect to simply draw in the long run. Now, in the options market, you've got to pay commissions for this every time, which means there's a very good chance you're going to be on the net losing side. All right, well, you might be thinking, well, how is this possible in the options market? How do traders take the center square? How do you block somebody from an advantage? By price. We've talked about that. Remember, price is the equalizer. Just remember that advantages conveyed by any indicator are equalized by price. You can't create rules that only apply to one side of the trade. If you know the rules, and we're assuming that everybody else does because it's publicized all over YouTube and on a million different web pages and in a million different books. That's why they give these indicators out for free. Everybody knows the rules. And at least in the market, anybody who survives knows the rules. So when you step up to start competing in the markets, you got to have a little respect for the person on the other side. They're probably very experienced as well. And that means you really shouldn't expect that you've got some kind of a long-term edge. Instead, at best, you're probably just going to be forcing draws. So for example, here we are in the TradingView platform, looking at the NASDAQ 100, the QQQs, and here are some Fibonacci extensions. And first of all, look at all of those. My gosh, if you're going to take that many shots on the board, something's going to line up. And yet traders will look at this and say, oh, look, it's supported right here, just like Fibonacci said it should. Or it supported right here, look at that. And what they fail to realize is that everybody knows that. Everybody can see this. Everybody knows what the rules are, and everybody is bidding these options up or down according to what they think is going to happen. And that means, in the end, there's not going to be a net advantage. So the best thing to take from all of this is not to discourage you, but instead is to protect you. Don't get overconfident because you learn from some guy on YouTube who's been trading for 6 months and suddenly says, here's how you make all the money in the world by trading Fibonacci. Let me show you how it's done. Understand everybody knows those rules too. Now, this is not to say that technical analysis doesn't work at all or that you can't get any clues. You can, but they're very small for the reasons we just talked about. They can give you small hints about, is today a better day to enter, or should I maybe wait? Or should I start scaling out now? But they're not going to just hand over free money just because somebody teaches you Fibonacci extensions on YouTube. You're better off taking long-term perspectives, long-term upward biases, and hedging, rolling, and morphing, and managing the risk, not your profits, based on a misperceived advantage by using your technicals. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a candlesticks and technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.